When it comes to managing for other people, they're a pain in the butt.
Those are Ed Kirch's words. When it comes to managing for other people, they're a pain in the butt. And he can say that because he owns 220 of his own rental units. Ed has figured out a way to turn his property management operation as more of a wealth building rental property investing company than just a management company. Unlike Tracy Strike, this episode isn't about how he acquires deals in the service of the property management company. It's about how he built a real estate investing portfolio in lieu of a property management company by building a property management company. And the more I talk to people about this stuff, the more serious to me we're going to get about laying out kind of like the pros and cons and the reasons why you may or may not want to really, really point your gun at this. We're going to get into more of that later this week. But for right now, it's worth noting that Ed is able to call his own shots as a property manager because he owns this portfolio. At the end of the day, as entrepreneurs, is that not what we're here for? Are we here not for just radical agency and doing the things that we want by having our own business? Ed's figured that out in a completely frame-breaking way. I met him at Door Grow Live. I did not expect to bring him on the podcast, but after a couple conversations with Ed, it was pretty clear that you have to hear from him. Enjoy this conversation with Ed Kirch. Welcome to the Property Management Frame Breakers podcast. I'm your host, Pablo Gonzalez, and I am here to introduce you to the folks in the property management space that have broken the frame of what you may believe was possible. This podcast is presented by Vendoroo. It is your all-in-one AI solution for resolving your maintenance needs. Let's go. Ed,
How are you
your
doing?
last name Kirch?
Yes.
Okay, Ed Kirch. So very original company name.
Yes. I did that, believe it or not, out of necessity.
Yeah?
I used to buy a lot of property subject to, and I had to get my name on the insurance, so I had to figure out how to get my name on the insurance. So I formed Kirch Property Management, so I could put Kirch Property Management as an additional insured, and I put Ed Kirch underneath it, so I was insured, and it wouldn't call any of the loans for due on sale.
I like it. All right, so that's a perfect segue into what we're here to talk about, right? As I'm like, hey, I wanna shoot some content with you. You want some ads for your business? It's like, no, I don't want ads for my business. You have a property management company, and most of the properties that you manage are your own.
Yes.
And you have a sophisticated kind of like acquisition mechanism. First of all, just give me like an overview of what the company looks like, your portfolio size.
Okay. We manage 300 units. I own 220 of the 300 units.
Yeah.
When it comes to managing for other people, they're a pain in the butt. They demand a lot. There's not a lot of money in management. What I learned a long time ago, when I was 18, I bought my first house. 19, I bought my second house. Then when I was 21, I actually found a 45-unit apartment building with a 10-unit next door. And my girlfriend's father at the time put the down payment down, and we bought it together. And I learned right there that people would make me half partner just by managing the property, and they'd put the money down, and I could have half ownership. Now I was 21, didn't have the credit to take down a 45-unit apartment building or 55 units, but with a credit partner, it worked really well.
This is what people love about real estate, other people's money.
Yes.
Leverage.
And it's so easy, and people don't realize how easy it is.
Okay.
If you find the deal, the money will come.
That's what I hear that all the time, right? I also host this other podcast called the Not Your Average Investor Show, and it's all about rental property investing, right? And it's for the investor out angle. And the number one thing people talk about is I can't find the money to invest. So you just said that that's super easy. Let's challenge that right now. Right? So talk me through a scenario right now of finding money to invest and partnering with people, right? So like you just described to me your girlfriend's dad at the time.
Yes. What's interesting about that,
Yeah.
I broke up with a girlfriend,
Uh-huh.
and this was in 1978,
Okay.
79.
Okay.
All right? Got married when I was 45,
Uh-huh.
got divorced,
Uh-huh.
and got remarried 13 years ago
Okay.
to that girl.
Got it. Got it. That's hilarious. Okay. All right. That's funny, man. That's a good story. I think we could do a whole podcast about that one. All right. So then talk me through this idea of, what I'm hearing is essentially if you're a property manager, then you put the sweat equity into maintaining the deal. What does that conversation look like with a potential investor that's looking for properties?
First of all, you have to surround yourself with investors.
Okay.
I belong to like Door Grow, which is for property managers. As a property manager, you have nothing but investors, unless they're accidental investors, in your portfolio. And I also belong to a real estate college that we teach people to invest. So I surround myself with investors. And if they have confidence in you, I'll get up in front of a room, give a seminar, and at the end of the seminar, I'll have a little old lady, the kind of old lady that you look at that probably can't afford lunch,
Yeah.
will say, "Hey, Ed, I've got 100,000 in my self-directed IRA. So if you find an investment, would you call me?"
Interesting.
So it's the kind of people that invest with me are the kind that are not going out doing it themselves
Yeah.
because they don't have the wherewithal to do it by themselves.
Yeah. So essentially you are a turnkey rental property
Yes,
service.
yes.
And but I've only known the turnkey rental property service as like this Not Your Average Investor show in Jacksonville. It's people bringing their own capital to the deal. They purchase through you. They make the money on the sale, and then they make the money on the property management. It sounds like your model is completely different in the sense of like they're bringing the money on the deal. They're not paying for property management, or they are paying for.
They are paying for property management. I started not charging and realized really quick that if I got a couple hundred units management, that there's severe cost to that, and not charging for it does not cover my overhead.
So then, how do you justify if you are charging for it? How are you justifying your equity in the deal on these deals?
Finding a good deal.
Okay.
Give you an example. The last deal that I found was 2 years ago. We bought a 6-unit for $500,000.
Okay.
At closing, it appraised for $640,000.
Okay.
I didn't tell any of the partners any of this was going to happen, so they were all surprised after it happened. But I've got a reputation. I do good deals, so they just trusted me. So at closing, it appraised for $640,000. So we made $140,000 at closing. The rents were $800 a month. We've raised them to $1,400 a month, all within a year. And we've been offered $800,000 for the building already.
Okay.
And we're not selling, but we've been offered.
Okay.
And the building is realistically worth $900,000 right now.
Okay. So where does your revenue come from in that deal?
My revenue comes from holding it long term. They take 4 or 5 years to turn around and start cash flowing. And after 4 or 5 years, they cash flow, and we don't sell. We keep them.
Got it.
We don't take equity out of the buildings. We just keep them, and they'll start cash flowing, build equity. I use a lot of self-directed IRAs.
Okay.
So people with their self-directed IRAs put it into the deal. So they're long-term holders to begin with.
Yeah. Yeah. And so then what's the structure? So self-directed IRA has the capital for most of the down payment, all of the down payment.
All the down payment.
You are the property management company. You still get a property management fee.
Yes.
And then is the contract built in to say that you share the equity in the upside, the embedded equity?
We're 50-50 partners.
You're 50-50 partners in the capital appreciation.
Cash flow, everything.
Cash flow.
Depreciation,
Okay.
everything.
Okay, so you're 50-50 partners in all profit centers.
Yes.
But you are also the deal sourcer.
Yes. Here's another thing that's a big, big advantage.
Yeah.
Let's say you're a self-directed IRA and you want to buy $1 million property. You have one of two choices. You can partner with me, put $200,000 down, and have half the deal. Or as a self-directed IRA, if you want to do it yourself, you're going to pay cash for that $1 million property.
Yeah.
Because you can't sign for a loan.
Yeah. And with a self-directed IRA deal, the whole deal has to stay inside the retirement account as well, right? So like something goes wrong, they need to have enough capital to like withstand that within the account. Having you as a partner, you can now infuse more capital into the account, and that's part of the value.
And that's what I do.
Okay, got it.
Because on a self-directed IRA, the last thing I want to do is do a capital call.
Yeah,
that
correct.
doesn't go well.
You can't do a capital call in the self-directed
You
IRA.
can, but it doesn't go well.
You can, doesn't go well. So you are the arm that can have the capital call.
Yes.
That creates a lever. Ah, that's interesting.
And there's a lot of the properties that we buy,
Yeah.
we get good deals on them because they're run down.
Yeah.
They have an issue. Whatever kind of issue they have an issue.
Okay.
So I go in and I will take my maintenance company. We will rehab the property. We will run the property. And sometimes the property doesn't pay me back for 2-3 years.
Yeah.
That's okay. I don't care.
Yeah. But in the 2-3 years, you're making your property management fee.
Yes. But sometimes I have to wait on that too. If it's
Okay.
negative enough and I have to wait on it,
Yeah.
and I have to wait on the maintenance, I wait on it.
Are you fronting the maintenance costs, or you're
A
just
lot of
not
times I do.
charging? Okay.
A lot of times I will front the maintenance costs.
Got it. Got it. So you are providing some of that sweat equity on the front end.
Yes.
They're providing the capital. You're sharing in the profit centers. You have some runway to get there, and you're sourcing deals. So you've essentially set up a two-sided marketplace for yourself, right? Like you have the access to the capital because you're teaching real estate education, and then you are property managing on the backside, which means that you find properties that way. Is that how you find
I
properties?
find properties a whole bunch of different ways.
Let's talk about that.
One of the things I do is I send out 1,500 mailers a month
Okay.
to multifamily owners.
Okay.
Now, that sounds like it's a really good source, and it is a good source, but I may only get one deal every 2 years. So I may have $30,000 in mailers before I get one deal.
Interesting.
So for a new investor could never do that.
Got it.
But we send mailers out, and then
Yeah. You were also telling me that you take a lunch meeting every single day.
every day
That's
I
part
never,
of deal flow too, I would imagine.
never eat lunch alone.
Never eat alone, right?
Never eat alone.
Did you read that book?
No,
Yeah. There's a book by that title. I'm like, I don't need to read that book because I already do that. But it's
Yes.
a great book on networking. Rick Federici, I think it's called.
and that's the other thing. Like when I negotiate a deal,
Yeah.
I get an owner that wants to sell a property. The first thing I do is we do a lunch appointment. We go look at the property. We do a lunch appointment. Imagine being stuck with me for an hour at lunch.
Yeah.
By the time lunch is done, I know why you're selling the property, how much money you've got in there,
Yeah.
what are you going to do with the money.
Yeah.
You might be an ideal candidate for solar financing. At the end of the deal, I know what to offer. I spend 5 minutes negotiating out of an hour and a half lunch.
And this is someone whose property you're managing that tells you that they want to sell it,
Or somebody just calls us,
or somebody
says
just
they,
calls
they
says
might
they
want to sell.
it. And how did that person find you to talk to you to tell you that they want to sell their property?
Usually from the mailers.
From the mailers. All right. So what I'm hearing is essentially you are always building relationships,
Always.
right? Whether it's the daily lunch, whether it's an inbound kind of request for a transaction, but first you take them to an hour lunch before you even talk any kind of business. You're out there educating, so you're providing value to the market in a way that builds trust and builds authority, and that brings you deals.
Yes.
What else? What are the other tentacles in your relationship building army here?
One of the things I do,
Yeah.
a lot of my apartment buildings are on major thoroughfares. Okay? So in front of every one of my buildings, I have a 4-foot by 4-foot sign, and I have a severe advantage over most people. I'm colorblind.
Okay.
Okay? A lot of these signs that people have, you can't read. When you're going by quickly, you just can't read them. My signs are canary yellow, and I think they're red letters.
Okay.
Ugly. They're big and ugly.
Yeah.
But I have them in front of all my buildings. People always notice my signs,
Got it.
and they'll call the signs.
Got it. Got it. So you have signage out in front of all of your buildings. You have like a go to lunch flywheel. Tell me about how do you find enough people to go to lunch with every single day?
Oh, it's not hard at all.
How do you do it?
If I talk to a vendor,
Yeah.
let's go talk to them about, let's do it over lunch.
Yeah.
You get a seller, maybe I'll go to lunch with a seller for a year before he sells to me.
Okay.
So we go, once a month, once every few months.
Yeah.
I
Who's
have
setting this up for you? Are you manually texting people to go to lunch? Like you're looking
Yeah,
at your
I do it
calendar?
myself.
You do it yourself?
I talk to people when I talk to people.
Yeah.
And I'm usually not looking for people.
Yeah.
It's usually when people I'm dealing with,
Yeah.
you know,
Yeah.
it's like,
So you've built it into your flow.
Yes.
essentially, right? So like this is something that I like to talk about when it comes to, when people want to make content, they get so into this idea of like, okay, well, I have all these ideas, so then I'm gonna, film this video, and then I'm gonna go film that video, and I'm like, you need to ritualize what you do. You need to make it part of your lifestyle, right? Like this is me, right? Like I carry around my lights, I carry my things, so when I get into a conversation, I can just shoot an interesting podcast with someone. Sounds like you have ritualized this idea of every conversation you're in, whatever,
And
you're like, let's talk about going to lunch together. When do we set up a lunch? And you've just kind of like built it into your flow.
I do a Zoom call every Tuesday night, 9 o'clock at night Central Time.
Okay.
And anybody can be on it. And all we talk, every week we talk about different stuff in investing.
Yeah.
And people on the phone call will say, yeah, if you want Ed to help you, you better take them to lunch. They just know if they want me to go negotiate a deal, and I'll negotiate a deal for them.
Yeah.
It doesn't bother me.
Yeah.
But if I'm negotiating a deal, it better be over lunch.
I love it. I love it. So now not just have you operationalized it, now you're talking about another thing, right? Like this idea of like weekly office hours and having people like us that build a lot of relationships, right? It's hard to keep boundaries and it's hard to not be too busy all the time. Maybe not for you because you figured some stuff out that I have yet to figure out, right? But when I talk to really busy people and they're like, man, so many people want a piece of me. And I always tell them, I'm like, listen, when you are first kind of building your relationship, you are borrowing other people's watering holes. You're going to events, you're going to things, and you're talking to them there. Once you have enough people trying to get a hold of you, set up your own watering hole, right? Like that creates your own thing. And I simplify it to exactly what you're saying. If you have an hour every single week when anybody can show up, ask you any questions and whatever, you start to get control of your time in a way for like, it's a great filter for somebody that wants a piece of your time. You can then ask them, sure, you can have a piece of my time. This is the piece that everybody can get. And if you come to this piece, now we can talk about going to lunch or maybe you get more of my time. And it's a great kind of like filter for people and a great way to control your schedule.
And the benefit I have so many units now.
Yeah.
And they're cash flowing nicely.
Yeah.
I don't need to be in an office anymore working.
Well, that's what you figured out that I'm talking about here.
I have a wonderful staff.
Yeah.
The staff works really good.
Yeah.
And they don't need me.
Yeah.
The staff will say, yeah, he's just a pretty face here. We do all the work.
Yeah.
And they're telling the truth.
Yeah.
Okay.
You do have a pretty face. It's true. Yeah.
But they do the work, so it's not a big deal.
Yeah.
And
I think that is, to me, that's the reason for this conversation, right? Like it's the idea that I think property managers today they determine their value based on the tasks that they can do and the level of activities that they can maintain. But if you can think a little bit differently and think of your business as not just a way to do tasks, but a way to create wealth, and you apply these concepts that you're talking about, right? Like, how can I set up this? All right, I've been able to create a machine that does things. The thing that it doesn't need to be the thing that everybody uses it for, right? Like I've been able to create a machine that knows how to make and repurpose content. I don't use it to like pay me to make and repurpose content. I use this machine of being able to make and repurpose content as a way to build relationships that lead to much bigger deals and much bigger outcomes. You've turned your machine of being able to make hard assets cash flow, right?
Yes.
And make it easy for people to live in as a way to not just be paid to be a property manager, but as a way to build wealth, to build monthly cash flow, and to give you absolute time freedom is what I'm hearing.
One of the biggest advantages I had when I was 18,
Yeah.
two things that people said to me that I still remember.
Yeah.
First of all, the first thing they told me, if I want to become a millionaire, go borrow $1 million. Sounds stupid, don't it? Telling an 18-year-old?
Yeah.
Yeah, it took me a month to figure that out.
Get out of here. Tell me that story.
If you buy real estate, will people finance you?
Yeah.
By the time I was 25, I had half of $18 million worth of real estate.
There you go.
And I used other people's money. And so once I figured it out, it was easy to get $1 million. And the other thing they told me is that my time is worth $300 an hour. Back in the 70s and 80s, people were getting $4 or $5 an hour.
That's a lot.
So when they told me my time was $300 an hour, I took that to heart. Mm-hmm. And whenever I was looking at doing anything, I was saying to myself, if I'm not worth $300 an hour to do this, I need to pay somebody else to do it. And it's like I'm also a realtor. And I used to outsell two of the company's offices every year. And when it comes to putting listings in, do you know how many listings I put in my whole life, like manually myself?
How many?
How many would you think?
Man, your whole life, I don't know, 200.
One. I figured I should know what was involved.
Yeah.
So I put one in.
Yeah.
And I've always hired somebody to put my listings in.
How do you get there though, Ed? Like when you're just getting started and you don't have a bunch of this cash flow and
You
whatnot,
struggle.
you struggle.
You struggle. I mean, bottom line, I struggled.
So you hired people to do it to the detriment of your own profit in order
Yes.
to set up the machine in order to get you to work on strategic
Yes.
things.
You know, becoming successful in business is not overnight.
Yeah.
And that's what especially with young people, that's the biggest thing they miss. They expect to come in and expect to become a millionaire overnight.
Yeah.
I have people come in my office and they see what I'm doing, and all of a sudden they get jealous, whatever, they won't try to do it themselves.
Yeah.
And they're out of the business in 6 months because they're not willing to put the time and effort into making it work.
Yeah. Yeah. That's so interesting, man. You're taking me back to I was like year 2 in my business and I'm with the co-founder of JWB, Greg Cohen, who's become one of my best friends, and we're doing this presentation at a Jack's RIA. And somebody asked him like, hey, what is like the biggest piece of advice you can give? And they're 19 years in, they manage like $1.3 billion in assets. It's a $200 million company. And he said, don't focus on how much money that you can take home in the first couple of years. Right? And I
Yes.
was like, and it hit me like a ton of bricks because I'm like, oh my God, I feel so much better about myself right now, right? Like, because I had created a cash flowing business. I wasn't really taking a lot home. I was really focusing on, I remember when I got that account, I was just all in on that account. I knew that account would change my life, which it has, right? I would not
Yeah.
be here had not had, knocked it out of the park with JWB year 1, and now we're 6 years into it. And I remember his partners asking me, how do you scale this? Like, how are you possibly going to do for other people what you're doing for us? Because you're here all the time and you're all in on our business. And I told him I didn't care. I was like, man, I don't know.
I'll figure it out.
I just know that if I do this really, really well, something's going to open up for me. And it took about 2.5, 3 years before I really started, before my wife was like, hey, okay, cool, now you're really contributing again. But since that moment, I've made more money than I've ever made in my life because I focused on
Making it work.
figuring out where the value came from and maximizing the value I give to other people. And then I figured out how to actually take home money from it. And it reminds me of like what we were just kind of talking about. It's this idea that people are so focused on how do you scale things and how do I get out of the business that they're not realizing that the true value comes from doing the unscalable. Can you kind of like tell me your mindset around that?
I spent years making my business. I never concentrated on making money in my management business. Until I got in door grow a few years ago, my property management never made money.
Okay.
All right. It was always the real estate that made me the money. So I didn't care. So it's just for years and years building the real estate, knowing if you had enough units, it would cash flow. So I just built it over the years.
Yep.
And when you buy an apartment building or something, they don't cash flow for the first 3, 4, 5, 6, 7 years.
Yeah.
They just don't. And people think they're going to buy an apartment building and it's going to cash flow day one. They don't. It takes years.
Yeah.
And I just stuck with it. He had some bad partners. He had to start over, things like that.
Yeah.
But it was all a learning experience, figuring out how to do it, how to do partnerships, how to make them work. And once he figured that out, it just finally took off.
So you were taking your cash flowing, the thing that you generated revenue with, and then you were investing it in the kind of like ball of value that could then create the wealth that is gonna end up happening. You mentioned something really interesting just now, which is what made me really like perk my ears up this morning. It's the idea that you got really good at creating partnerships.
Yes.
And when I was talking to you, you were telling me that you have like, I don't know, 60 different partnerships with like 60 different people for 60 different deals or more.
Each partnership that I put together, a lot of
Yeah.
times I'll use 2 or 3 partners in.
Okay.
I don't want one partner for a partnership.
Yeah.
Because if something happens, like for example, we refinanced one of our properties last November. One of the partners is getting ready to retire. He wanted his money back in his, self-directed. So we bought him out. He was only a 6% partner.
Okay.
But it's a $4 million property, so it still came out to some money. And we refinanced the partnership, bought him out. But if he was 50% partner, that would have been, now we would be starting a whole new loan on that property. And
Yeah.
I teased this idea that I didn't expect to have Ed on the podcast because when I first met him, and then actually even before meeting him, somebody told me, Ed is just so comfortable where he's at. He's not somebody that's going to adopt AI or, do these things. But at the event I was at, I gave this presentation on the CEO memos and the future and how quickly it's moving. And even Ed, who is totally comfortable in his wealth building, doesn't want any more clients, as you've heard, is basically set for life right now because of his real estate portfolio. Even Ed came up and set up a call with Vendoroo just because he didn't want to get left behind on the AI thing. I don't think that this is optional for people. If you plan on being in business in 10 years, if you plan on being alive in 10 years, I think you really need to apply yourself into understanding the context shift. And one of the easiest ways to do it is to work with Vendoroo. Right? Like, just take a demo with Vendoroo, see what we're doing, see what's possible, test it out. Because at the end of the day, we're only at the tip of the iceberg. Things are changing quickly, and you need to understand what agentic AI is capable of now, because it's only going to continue to accelerate behind this, and you don't want to be left behind, even if you have 220 of your own units. So go to vendoroo.ai if you haven't yet. Book a demo with us. Just like, check this thing out. You're going to want to see it. vendoroo.ai.
So can you give me kind of like, we've kind of talked around it, right? Like, I'm trying to conceptualize this all into like one blueprint. And from the way that I'm understanding it, there is finding people with money in their retirement account, right? Showing up as, having the operational arm ready to go. You take the capital from people that is in the retirement account to acquire an asset that you have found off market that has some value add capability in there.
yes, sometimes they're even on market.
Or even
You'd
on
be
market.
surprised.
Okay.
Sometimes a realtor will sell an asset that they don't know what they're selling.
Sure.
We bought a 15-unit apartment building and closed on it. So they sold me a 15-unit apartment building, but it's not what I bought. I bought 15 townhomes that were pinned separately
Got it.
that they never put a value to.
Yeah. So either off market or on market, but you have some kind of expertise that makes a difference in the valuation on day one. Right?
Or you can raise rents.
Or you can raise, that you can make it operate, right? Like, you have expertise, like you have intellectual capital.
Yes.
Right, that is either how I can make this operate better, how I can rezone it in some way that adds value, what are the improvements that can be made that I know exactly what they cost and I know how much pain it is, but I know how to do it. Talk to me, why 4 partners? Are you pooling the pool of people in their retirement accounts, like 4 or 5 people into a deal per, and you're the operator?
Yeah, and I'm a 50% partner, then the other 50% goes for 2, 3, 4 partners.
Okay.
You don't want to get too many partners because now you have a syndication, and
That's
now
what
you have to register.
ask. This sounds like a mini syndication.
Yeah, but they're not syndications.
So what's the fine line?
They tell me definitely don't get close to 10.
Don't get close to 10.
10 partners.
Okay.
And so somewhere between 5 and 10, you're going to cross the line.
Okay, got it. So you keep it to 5.
Yeah.
So you keep it to 5 partners. You have a wide network of people that you have now created these relationships with, that they all have different SDIRA, like they have different retirement accounts. Are you doing the math on like, hey, Judith, I know that you have an extra 50K, and Henry over here, he's got 100K. Like, how's that operation look?
I know right now I'm sitting on unbelievable money.
Just in your network, you're sitting on unbelievable money?
Yeah.
Okay. So you shoot an email out or what?
No, I call.
You just call around.
I know right now I've got between $5 and $6 million cash waiting for me to find a deal.
Interesting.
But most of my deals are smaller deals, so I need $200,000, $400,000, $500,000, $600,000.
Yeah.
So I don't usually do the real big deals. The problem with is now you're competing against the syndicators. Syndicators will buy deals that don't make sense.
Yeah.
Okay, I won't buy a deal that don't make sense.
That's so interesting, man. So there is like a sweet spot. I did some work with like a medical office building fund about a year ago, and there's just this like sweet spot between, like they were living in the sweet spot between guys like you and the institutional, like the institutional buyer, right? Like somewhere in there, like they found their sweet spot. You're finding a sweet spot of it's well below those guys.
Yes.
Smaller assets. You're saying they're like $400,000-$500,000 kind of like assets,
Or even $1 million.
or up to $1
The
million.
syndicator is not if you're going to do $1 million syndication.
Yeah.
Okay, because it's just too small for them. But then you start getting the bigger projects now, and you compete against a syndicator.
Yeah.
Syndicators, a lot of times, they're in there for the fees.
Yeah.
They're not in there for the asset.
They're not in there for the equity.
And when I buy something, I'm in there to make sure I got a good deal.
Interesting.
And that's why my partners like me, because they know, first of all, I'm signing for the loan. So I'm not going to sign for something that doesn't make sense.
Yeah.
They know they're going to make money.
Yeah.
A lot of times it's tough when you buy appraises for a higher value day one.
Yeah. Aligned interests, right? Because
Yes.
you're in it for the equity with them,
Right,
not just the operator's fee.
right.
Even though you do make an operator's fee,
And that covers costs.
which covers costs.
There's not a lot of money in property management.
Got it. And you are bringing, number one, the deal, and you're also bringing the insight into the deal of why it makes more money.
Right.
So again, I'm trying to tease out the whole thing. So you have like a network of people that you have built over time that have money sitting there ready to deploy. You have your machine that turns assets into operating assets, right? You have your proprietary knowledge, which is why this thing is going to perform for us when nobody else saw it.
And that's part of it right there is really hard to explain, especially to young people.
Yeah.
They take that for granted. They just see what I do.
Yeah.
And there was one day I had a business coach. We're sitting at a table
Yeah.
for breakfast.
Yeah.
And I had somebody I was helping invest. I said, you need to go do this, and this.
Yeah.
And my coach looked at me and he says, really? Are you serious? Do you really think he's going to be able to do that?
Yeah.
And I had to think about it a second. I said, yeah, you're right. All right, yeah, okay. Because I take a lot of things I do for granted.
Yeah.
So when I get young
Correct.
people and I'm trying to coach them,
Yeah.
they don't realize I've got 47 years of experience, that all this stuff comes to me naturally.
Yeah.
And as I just know, you give me an apartment building, tell me what the rents are.
Yeah.
I know what that apartment building is worth.
Yeah. When did that light turn on for you? Right? Like I feel like if I'm listening to this, I'm like, how do I get value from this? Like, yeah, okay, Ed's got 47 years of experience. I don't. How am I supposed to like get to where Ed is?
What you do, and I encourage all my students,
Yeah.
go online, get an APOD, okay? Annual property operator data. They're online, you can get them. And start analyzing properties. And the APOD is set up real nicely where it sets up all the fields that you need to be filling out. Start filling out 2, 3, 4 a week. And all of a sudden you're gonna get a property when you fill it out, it's gonna be different than all the others. And the second you find out that it's different,
Yeah.
you're gonna know. So you gotta get used to your numbers.
Yeah.
There's a little column in there for percentages. That's the most important column because like if in my market, if you say taxes, I know taxes are 15% of my gross.
Yeah.
I know maintenance is 10% of my gross. Property management is 10% of the gross. I just know utilities are gonna be 5%. I know in my area, expenses are gonna be 50%. So if you give me a property and you're telling me the property is 30% expenses, there's something wrong.
Got it. So what it sounds like, if I was starting from zero, is you start getting these APODs, you start filling it in, you're gonna find some outliers of, okay, yeah, no, I should go cut my teeth in this.
Yes.
Right? You're gonna find that deal, and then once you do that deal is gonna inform the rest of those numbers that you've been using, and over time, you're gonna dial in tighter and tighter on exactly what those numbers need to be, which then, the tighter you get on that, the more properties and more certainty you will be able to like uncover.
Right.
Yeah. Okay.
That's when it comes to buying properties.
Yeah.
You want me to buy one of your properties?
Yeah.
What do you think I want? I want the numbers.
Yeah.
Ask me if I care about rushing out looking at the property.
Yeah.
Tell me the situation of the property, and I can tell if your rents are really low.
Yeah.
I can tell you right away the property is going to take a lot of management.
Yeah.
It's going to take a lot of maintenance because your rents are low.
Yeah. Yeah, man. What I'm hearing, Ed, is that you've done a very good job at taking the knowledge that comes from the reps that you get as a property manager and turning that into like intellectual capital that you can now infuse into other things that aren't just like operating a property management.
Yes.
Why can't AI just do that?
It's not that easy because the AI is just going to take the numbers and just analyze the numbers.
Yeah.
AI is not going to give you the relationship with the people.
Yeah.
Sit down with an owner for lunch and get that relationship. I've had people sell me multi-million-dollar apartment complexes with no money down and owner finance it. Tell me how you could get AI to do that.
This is what we were talking about, right? Like
Yes.
this is we're talking about this idea that people sleep on like the relationship side of things. They sleep on like the trust side of things. They think knowledge is everything that you need. You have all the knowledge. Yes, you are Ed GPT
Yeah.
for real estate deals, but that's not going to close deals for you. The thing that's closing deals for you is that you've put in the work of taking people to lunch, building their trust. You've built a reputation, right? Like
Yes.
you're the way that I like to describe this is that property management is going from a task-based business to a trust-based business because
Relationship.
the tasks are getting commoditized.
Right.
So what's your vision? Kind of like where do you see the stuff that you've seen, these softwares? I mean, you've been doing this for 40 years, right? Like software has changed, AI has changed. Where do you think the industry is going right now?
You say software has changed from the time I started.
It invented software showed up.
Let me help you.
Yeah.
A couple of things showed up.
Yeah.
Cell phones showed up.
Yeah.
Fax machines showed up.
Yeah.
Computers showed up.
Yeah.
We did all, when I first started, we did all this manually.
Yeah.
There were no computers.
Yeah. True.
Okay, so yeah, it's
So you've lived the entire 0 to 1,000 rate of change.
yes.
And then now what are you seeing?
Now the rate of change is astronomical.
Yeah.
I guess where we're going to be a year from now is scary because I think it's going to be double the technology we're using now.
It's 100% right. It's AI is doubling every 6 months. So you're accurate.
I mean, a couple of years ago, I had one of these young whippersnappers
Yeah.
come in, played with my phone system,
Yeah.
okay?
Yeah.
And an hour later, came in with a crate, took all our desk phones off and put them in a crate and walked off with them.
Wow. Yeah.
Okay, it's like, what are you doing?
So what do you think it looks like, man? Like if you were young Ed starting from zero right now, how would you start?
I would start analyzing properties on a regular basis.
Doing the work of analyzing the property.
Yes.
That's the flywheel that builds the intellectual
And
capital.
I would start buying,
Yeah.
even if you buy one property a year, especially if you're young.
Yeah.
Do you realize my goal was start to buy one house a year for 20 years. At the end of 20 years, sell one house a year. Okay?
Yeah.
I got carried away on that. And now what I figured out, and this takes higher math,
Yeah.
when you pay off a property, they tend to cash flow real nicely.
Yeah.
So we're paying off 1 to 3 properties a year right now.
Yeah.
And
And keeping the cash instead of selling the property, you're just
Keeping
paying
the
off the
cash flow.
property
Yes.
and you're keeping the cash flow. As I built my previous business, I basically was just like looking for. It's very parallel, right? Like I was looking for learning and applying my thesis of community creation for business development and like seeing what kind of things I could get into. As it started cash flowing, I started buying rental properties. And I remember, like I was at like an inflection point last year where I'm like, man, I'm making really good cash flow here. I'm not really building a business that I'm interested in selling, right? Because like the valuation of this business versus
Right.
the amount of fun I'm having doing what I do is never gonna match. So I was very comfortable thinking, okay, I'm just gonna take all this cash flow and continue to pour it into real estate and pour it into these assets so that I am building this like ball of value that I can cash flow off of or I can sell, right? Like a real asset.
just keep them, don't sell them, don't refinance them,
100%.
pay them off.
Yeah.
And then when you retire, you have nothing to worry about.
Yeah.
If technology changes and wipes out your business, it doesn't matter because you still got the real estate.
So you think even as a property manager, people are better off using their property management to acquire real estate than like building a property management company to sell?
Oh, yes, hands down.
Hands down.
We bought 4 years ago, 5 years ago,
Yeah.
we had somebody come in with an 8-unit apartment building. His best tenant was only 3 months behind on rent. His second tenant flooded out the bottom 4 apartments and rented out 2 of the other apartments to squatters. Okay. And he says, what's it going to cost me to get this managed? The city's coming down on me. And this was on a Friday. I said, well, it's going to cost you $250,000 to fix up. I said, or you can sell it to me and I'll go to court next week with you for the city. He sold it to me for what he paid for it 20 years a year earlier. So he sold it to me for $250,000.
Yeah.
The building right now is cash flowing and it's worth $1 million.
Wow.
Just that one deal. I called my lawyer and said, we need to close on this building Monday. I need some money to fix it up. You want to be my partner? So he put the money down to fix it up. He made sure it closed on Monday. And so we closed on it from Friday to Monday. And right now we've got it on a 7-year amortization.
Yeah.
In a couple of years, it's going to be paid off.
Yeah.
And we have $1 million asset.
Incredible, man. That's incredible. You just added $1 million to your net worth. Yeah.
And you got the cash flow.
And the cash flow. Yeah. And that thing's not going anywhere. It's only going to continue to appreciate. It's going to continue to go up in cash flow.
Yes.
And I feel like we've talked about a lot of different things that I think are all useful and little snippets that people can take. What would you say if I'm a property manager, I have, 150 doors, and I'm just kind of like figuring out the business? What's the...
If any of your people want to get out and they want to sell, those are the ones you look at buying first.
Yeah.
And they may sell it to you with owner financing because they're used to you getting a check from you every month.
Yeah.
They may still want to continue getting a check without the hassles. Buy those first. Buy 1 or 2 a year.
Yeah.
Get to the point after you start buying them. So now instead of 1 or 2 a year, maybe next year you buy 2 or 3 a year.
Yeah.
Just keep adding to your portfolio. Use other people's money.
Yeah.
Never take money out of the projects. Everybody wants to keep refinancing. I've had 2 partners that have done that.
Yeah.
One had 300 homes. And in 2007, his bankruptcy took 10 years. My other partner got the partnership up to $100 million. He died right before 2007. The bankruptcy for his estate took over 10 years. So you can take money out, and if everything goes good, you're good. But if you have a glitch in the economy, it causes a domino effect.
Yeah.
You lose everything.
Okay.
So I don't take money out of my deals. I do another deal. I'll get a really good deal, have you partner with me, and I'll give half of it away. Just to be safe, just to build the equity, and keep buying and keep building.
And take people to lunch.
And take people to lunch.
Right?
And what's really good is they always pay for it.
Interesting. Get a bunch of free lunches. How do I get in on one of your deals, man? Is that possible?
Yeah.
Okay.
Yeah, we can do that.
So if somebody's listening to this podcast and they want to reach out to you, do you want to put that out there, or do you like to just?
We have to have a relationship.
We have to have a relationship. All right. So you and I officially have a relationship.
Yes. I can't like if somebody reads the pod, the pod and also they say they call me. I want in your
They got to
partnership.
take you to lunch.
Yeah, we got to do lunch like 3 days worth of lunches.
Okay.
Because we have to have a relationship before we do any business.
Okay.
Because otherwise you're crossing the SEC lines again.
Yeah.
And you can't advertise for money.
Uh-huh.
So you have to have a relationship.
Interesting.
The hardest problem I got with partnering with you right now
Uh-huh.
is I'm having a real hard time finding properties.
Yeah, for sure.
Okay.
For sure. That makes sense. Yeah, and you've got a surplus of capital sitting on the side.
Yeah,
of your
I
desk.
can't.
And people who are in line before me, right?
It's not so much that because I always do 2, 3, 4 people. Sometimes I'll get somebody, a new investor that's with me.
Yeah.
I'll just get them for $25,000 and they take a smart piece. I'm okay with that.
Yeah. Okay. Before we go, so that's tactical advice of just like, hey, just start now. Get in anytime a client is thinking about selling a property, take him to lunch, find out why they're trying to sell the property, see if you can talk into like a owner financing deal and just like start owning properties, set a goal for 1 a year, take people to lunch, do all that stuff. If they're doing that, somebody implements that, any advice on structuring contracts and structuring partnerships that you can give people et al?
You get a lawyer.
Get a lawyer.
We buy everything in an LLC, and everybody's a member of the LLC. Okay. And then if you're going to use a self-directed, I think the self-directed has to have his own LLC or something like that. Whoever you got the self-directed with will coach you through that.
Okay.
And the LLC would be a partner of it. And LLCs cannot sign for loans. And then not LLC, self-directed, cannot sign for loans, and they cannot manage themselves.
Got it. Okay. Anything else, man? Anything else you want to share?
That's about it.
This was awesome, man.
Thank you.